everybody, Mando Trading here on November 25th, and in this video we're going to go through some more examples on price reading from the long short quizzes that I give on Twitter on Saturdays. If you haven't already, please subscribe to the channel, like this video, drop a comment what you think. Alright, so example 1, as always, if you want to pause the video, here's the spot to do it, and we'll come on back and get to it. But first question I always ask, what market structure are we in? What trend are we in? Are we bearish? Are we bullish? All right. So if you paused, great. If not, you're going to see the answer anyway. So here we're looking at Coinbase's 1-week chart. Following the bullish market structure shift, took out multiple sets of highs with this run here. So that would be where the fibs go from your low to your high. Now we're looking for a discount imbalance, right? So this is a bullish trend. So specifically, we're looking for a bullish imbalance in discount. Where would discount be? Below 50%, right? Preferably you get that 62 to 79. That's where I feel the best, that little golden pocket. But anything under 50% is technically a discount, right? If 50% is fair price or equilibrium of a range, anything below it would be you're getting it at a discount essentially. So here's your first discount run. Not quite enough to get us going. One more time, and here it is, and we take off. And that move itself was from, let's say you bought it off the high of the imbalance at 52. That run went over 110. So I think it was actually 114. So this is how I use the model on a higher time frame. With the weekly, does it take forever? Yes, it does. That's why I tend to trade shares when I do this, and not so much the options contracts, because it is difficult to really zone in and be as precise as possible with the time aspect of it. So this is example 1. If you have any questions about this one, feel free to shoot a comment down below. All right, here's example number 2. Again, when it comes to the order of operations for me, I'm doing the first one for everybody while doing these and making sure that there is no higher time frame liquidity swept, because when higher time frame liquidity is swept, we get some sort of imbalance. We can actually expect a reversal. So that's why I'm not making it really that difficult. I'm not trying to trick anybody, and I'm just giving it like it is. So in this case, order of operations. Second would be market structure or trend. What's the trend here? So once we determine market structure, we can go on from there. So if you want to pause the video, pause it here. But if not, we're looking at a dollar on the hourly time frame. We have taken out these lows, creating a bearish market structure or a bearish trend with that move here. That's why the fibs are there. Now our retracement back up into where? A discount bearish imbalance, which you have the discount bearish imbalance right at 50%. Here's your little reach, and from there you get the meltdown down and through our low, creating another one in a sense. If we wanted to just, here's our next fib mapping, right? But number 2 is a short. If you have any questions about this one, feel free to shoot me a message in the comments. All right, here's example number 3. Again, market structure or trend, which direction? And if you want to pause the video, you can pause it right here. But the answer to this one is back at Coinbase again. This is for that second little leg up that we just got. So highs we're taking out here with what price run? From low to high. And at this point, we're looking for a retracement into a discount bullish imbalance. We got a few down here. This would be our first big one right in that golden pocket area. This one's below the golden pocket. I tend not to trade those. But also we have a bullish volume imbalance here, which created a couple of bounces in the process. But here's your discount retracement, golden pocket, and your bounce back up to the high. Mando model complete. So if you have any questions about this one, feel free to drop a comment down below. But let's go to our last example here. All right, last but not least, example number 4. A little bit trickier, but still not too hard. Let's take a look. What's the market structure? What's the trend in this current example? So if you want to pause the video, you can pause it here. But if not, here's the answer to number 4. And we have, boom, Palantir on the weekly, taking out highs right here with this price run from low to high. Why would I not put my fib here, right, from that initial price run? Well, it would have been there until we moved higher and didn't retrace down into discount. So if we were to map the range like this, you would notice that discount would be somewhere down in here. We never got there. So to me, all that's telling me is that the range isn't set, so I gotta wait. And this continuation move higher is then followed up by your retracement into discount. What's the confirmation for that discount retracement? Look for a bearish imbalance to kind of confirm it. Yep, we're going down to discount from here. Here it is, right off 50%. Here's your little wick mohawks right below 50% to get us into discount. And there's your final run up and through that final destination. So the reason this week that I chose all the examples from the weekly is to show that this model works on whatever time frame. So when I post the long short videos and people say, oh, I need a time frame. Well, no, you don't. The time frame isn't going to tell you anything in terms of which direction we're going, right? All the time frame is going to tell you is, how far out are you buying your contracts for this trade, right? So that's one thing that, I'm always confused when people ask that. If you're coming from the point of view like, oh, I want to see where the higher time frame liquidity is, I get it. That would totally make sense. The difference is, again, I'm not trying to trick anybody when I make these videos. It's just price reading 101, so that when you feel comfortable reading it just like this, then you add in that next layer of, okay, now I need to identify higher time frame levels and liquidity. And from there, you're going to feel really good about your ability to read price. So again, the whole idea behind all of these videos is that, right? If you can get that idea with the current market structure or trend down with your discount imbalance, then when you add in that last little layer of liquidity, if it's higher time frame, are you expecting this model to work? Not necessarily, because if this model were to work every single time, price would only go in one direction, and we all know that's not the case. So that's why when we sweep higher time frame liquidity, I'm not necessarily looking to play this model. I would prefer to play the first imbalance that occurs off of it, whether that's up or down, doesn't matter. But if you have any questions about anything that was said in this video, feel free to drop a comment down below. Again, if you aren't, please subscribe to the channel. I have a ton of content coming out over the next couple of weeks, and I appreciate everybody who sticks around and watches these. So thanks again, and I'll catch you guys soon.